You have fallen into the trap of trading the lower time frames. You think that the 1 minute is going to give you small stop losses, and because of that you are going to get higher risks to rewards. So let me tell you, this is killing your trading profitability. The way that you think kills your trading profitability. So in this video, we are going to talk about why trading the 1 minute or trading the lower time frames is killing your trading profitability and is killing your dreams of becoming a consistently profitable trader. Let me tell you that this video comes from someone that has traded the 5-second chart before and has learned from their mistakes. And I know that most of you are trading the lower time frames, so this is the correct video for you to watch. How do I know that most of you are trading the lower time frames? Well, I made 2 polls on YouTube and Twitter asking what time frame you guys trade, and the results are in. On Twitter, I asked what is your preferred time frame, and from 1,053 votes, 57% of people said they trade the 1 minute to 5 minute time frame. And on the YouTube community tab, we had 2.8 thousand people commenting, and 60% of people voted for the 1 to 5 minute time frame, which means that majority of people are trading the lower time frames. And this is why I think that this video is so important, and I want you to listen carefully. A lot of people come to me and tell me that they are close to profitability, but they think that the problem is their mindset. I normally ask, so what time frame do you trade on? And they said the 1 minute. As soon as I listen to this, I get PTSD of all of the previous mistakes that I've done. And now you might say, wait, what do you mean mistakes? So you traded the 1 minute. I still trade the 1 minute once in a while, and I also did it profitably, not only back then, but also now. So why am I talking against it? Well, because my first signs of profitability, and simple profitability, so to say, simple, came when I was focusing on a few things at a time, which means I wasn't being overrun by the information that the market is presenting to me. Because think about it, every candle you see is the market giving you information, is the market telling you a story. And for you to get profitability, you need to see a pattern in that story and then execute, not be emotional, cut your losers short and let your traders run to then be profitable, correct? Now, the problem comes when the fact that your trading decisions are done quick, when everything you do is quick, when every single minute you have a new piece of information. Putting this into a quick perspective, let's think about when someone is explaining you the charts. You are completely new to trading, and I come to you and I say, oh, this is what I do, this, and you're like, oh my God, please just take it one step at a time. Yet we don't take this advice for ourselves, correct? The 1 minute chart or the lower time frame makes it that trades are more volatile, more executions, more reviewing, more emotions. Everything is heightened when you are on the lower time frame. And this is why I recommend people to start on the 1 hour, the 4 hour, the daily. The people that are learning with me, what I always tell them is, our goal is to know where the weekly candle is going and where the daily candle is going. From there on, we read 4-hour order flow, and only then do we go on lower time frames to execute. Yet traders are looking at the daily, or sometimes not even looking at the higher time frame, and they're executing on the 1 minute. And if you guys want me to make part 2 of this video where I talk about another thing that is killing your profitability, make sure to leave a like and comment, because I can do that next week. But let me know if you guys want to see that. It is going to help the algorithm. And if, by the way, once you're down there, if you guys want to subscribe, trying to get to 70,000 by the end of the year, that would be perfect. But let's keep going with the video. So now let's keep an average beginner intermediate trader in mind. Most people will feel emotions while they are trading, or while they are in a trade, while they are in drawdown, while they are in profit, because trading is so against what we normally do as humans, right? It entails risk. We don't know if it will have a reward. We don't know any of that, correct? And so it's normal for people that are not yet used to trading to feel more emotions. But what we always say is your goal is to reduce the amount of emotions. And how can you take this piece of advice and actually apply it live? Well, by trading less. And how do you trade less? By having less pieces of information being thrown at you every single time. Because let's keep this in mind. There are 1,441 minute candles inside the daily candle. Think about how many pieces of information that is in 24 hours. Just saying this, I'm already like feeling my heart pumping. So as a beginner or intermediate, you are trying to predict where the next 1,440 candles are going in order to be profitable. Do you see how complicated this gets? And this is why on YouTube and privately, I talk about the daily bias, the weekly bias. In my entry that I have shared on YouTube is so much based on the daily and the weekly, because we are trying to be right one day at a time. If I am able to be right more than I am wrong on the daily, and I'm able to profit 20 pips out of every single day that I'm right, then I know that I will be profitable. And that's really the goal. Keep it simple, because for beginner and intermediates, the goal is to keep it simple. Everything I've done thus far was simple in the beginning. Then I started complicating everything, and I understood that the stress, the mental risk to reward in my trading and everything is being affected if I am trading the lower time frame. I know people that trade them profitably. I personally trade the lower time frames profitably, but mostly on futures. But if I think back to the days where I was trading the 1 minute on Forex and all this, they were more stressful times. And some people will probably ask, so why is trading the 1 minute more stressful? Well, because if you're trading the 1 minute, you probably also have lower stop losses. I'm talking like 5 pips. And the thing is, when you have a 5 pip stop, any price tick that happens is going to matter. If you're not precise enough and price moves into drawdown, even 1 pip is already 20% of your stop loss. That's huge. That's a lot of drawdown that you are taking by just 1 simple pip. So this is why I tell people that go on a higher time frame, stop trading the 1 minute or the 5 minute, go into the 15 minute at least, and have stop losses that are like 20 pips, because like that you can be wrong and you don't need a sniper entry. And then the market can move in your direction after giving you a big drawdown. And this is the last point that I will leave you with. I want you to think about what you're good at in trading. I would say you are good at spotting a direction, correct? You are probably good at saying, I think the market will approach this price level, or I think the market is going to go in this direction. That is normally one of the things that people master first. And that is seriously my goal that I want other people to master, is always the direction of the market first. Now that you've put this idea into your mind that you can probably spot a direction really, really good in the market, but you are not able to take advantage of it. Most of the time that happens because you did not have a big enough stop loss. And that's normal, because let's say if you're trading the 1 minute, because this is why I think that the 1 minute, the 5 minute, the lower time frames really kill people's profitability. It's because you don't give yourself enough room to be wrong when you are right. Which means that when I enter, people normally ask you, so what's your average risk to reward? And I've been saying, man, if I can get like a 1.5 or 1 to 2 risk to reward, then I'm happy. You know why? Because now I have bigger stop losses, but my direction is mostly right. If you go to my Telegram or Twitter, or even if you join the waitlist, you'll see that my direction, my bias on the daily, on the weekly, they are mostly right. And so my goal from there on is to have an entry that, even if it's not precise, the market can still prove me wrong for some time, but eventually prove me right and the direction is correct and I'm able to profit. And if I can do this slowly but surely, make 1.5, 2, sometimes 3R, and I can do this consistently most of the times that I'm right on the daily bias, then I know that I'm going to continue being profitable in trading. And that's really the goal. I know that that's your goal. I know that that's my goal. And I know that this is what we are all working for. And this is why I think that most people people by trading the lower time frames are killing their trading profitability. Let me know in the comment section if you want me to make a part 2 of this video, because there's another big thing that I know is killing your profitability, and I can make sure to make it next week. So make sure to leave a like and a comment. I'm also trying to get to 70,000 subs by the end of the year, to let me know that you guys want to see part 2, where I will talk about the other thing that is killing your profitability. So I hope you guys enjoyed. I hope this is helpful. If you start implementing this, I know that you will be one step closer to profitability, and you are one step closer to have a simple trading edge. Hope you guys enjoyed. See you next week.